Bismillah ar-Rahman ar-Rahim. Assalamu alaikum wa rahmatullahi wa barakatuh. Continuing from the challenges I have yesterday with the sinus and my throat, it still continues today as well. So in case I cough quite badly, please excuse me. So for a start, let me just quickly ask the members of the audience, with regards to a bit of your own background, how many of you are dealing with trading? If you can just put up your hands if you're dealing with trading. So no trading, okay. How many of you are dealing with futures and options and derivatives? No as well, okay. So basically it is either you are pure equity fund manager or an industry observer. Am I right? Yes, no? Yes, okay, great. Maybe also. Now, the only reason why I asked that is this is quite a complex subject matter, right? And unless you are in the business where you are dealing with futures market, capital markets, hedging, sometimes this is over your head, right? You say, this is what are you talking about? It becomes a bit more complex. And so therefore for the session, we can either make it a bit simple or we can get into the complex issues and so on. And so I think as the person who's having to moderate this, I will moderate this not to make it too complex, and we can leave to it to be pretty simple, however relevant to our own practice in the market, in the business, in the transactions, and how some of this actually gets affected from a conceptual point of view to how the market actually practices it. So alhamdulillah, we have with us noted individuals and scholars. Amongst the scholars, we have Ihsan, who is perhaps using some of these contracts quite heavily in his trading. So the way I would like to quickly start this entire session is a quick, maybe 1 minute overview and introductory remarks by the panelists, starting with Ustaz Kamal Mokhtar. Please just have a 1 minute intro of yourself, please.
Bismillah ar-Rahman ar-Rahim. Assalamu alaikum wa rahmatullahi wa barakatuh. Was formerly from Shape Financials for 5 years. Now with Zain Associates. Currently doing my master's in finance, conventional finance. So trying to understand more on the conventional aspects of the industry. I think that's basically all.
So Ustaz Kamal Mokhtar is being very humble. And to give you a correct perspective of him, I'll just add 1 or 2 lines. So I've known Ustaz Kamal for maybe about 22, 23 years, right? And the first meeting I had with him was in Medina when my wife and we went for Umrah, and my brother-in-law from my wife's side said, go and see this Kamal Mokhtar, he's studying in Medina. And believe me, I had my jumput and goreng pisang and tea in Medina with him. So this was how I got to know him. And over the period of time, we've kept in touch, and his experience at Shape Financials really proved his salt in the industry. He mastered in hadith studies in Medina, and when he was at Shape, some of his papers and his views on the practices were accepted by the Sharia advisors and Sharia scholars in the Middle East. Okay? So therefore, you know, for a Singaporean to write a Sharia view on a transaction and to be accepted by the Sharia scholars in the Middle East, many of the Middle East scholars and the fund houses know him from that point of view. So therefore, I'm saying he was very humble in the way he started it. And I know that this brother Kamal Mokhtar, Ustaz Kamal Mokhtar, is really a giant in Singapore for us. So can I then move to Brother Ihsan to maybe just give his quick introduction?
Bismillah ar-Rahman ar-Rahim. I'm Ihsan al-Sheikh, Chairman of Arab Malaysian, United Arab Investment. As they try to put me also, since there is a lot of Malaysian brothers and sisters here. Also, I'm one of the founding members of Arab Malaysian Chamber of Commerce. I spend a lot of time in Asia. I'm running an investment house. We participate in a few funds in Asia, and also we arrange some sovereign fund for big projects. That's in a nutshell, I could say. I'm also quite attentive to Sharia compliance conferences, and I like always to simplify the facts that Sharia is for everybody who wants it as a way of life, and it's a simple. I like to take out the complexity of some of our ulama who makes almost everything, no, cannot. So we wanted to be a bit more closer to them, and they are closer to us, to simplify the process. Thank you.
Ustaz Ahmad.
Bismillahirrahmanirrahim. Alhamdulillah, wassalatu wassalamu ala Rasulullah. Ahmad Fadlan bin Yahya, Malaysia by citizen, residing in Jeddah, currently working in Islamic Research and Training Institute of Islamic Development Bank Group. Previously was attached to Araji Bank Malaysia. Thank you.
Prof.
Assalamualaikum. I think I don't need to introduce myself because the chair lady, the MC has already introduced myself just now.
Thank you very much, Prof. So therefore the session, we have about 40 minutes, and we are going to discuss with regards to the hedging tools, the contracts that are in place, and so on. So Prof, I thank you for starting off the presentations and giving us an overview of the different tools, the different issues that we have in the market. So therefore, I thought of starting the discussion with regards to I think we can pass the contracts. So perhaps maybe the view of the need for hedging, and I think you highlighted a couple of the key points. But in our markets today, where we have say either in the capital markets and with the fund managers who are rather on a pure equities sort of an exposure for some of the funds, are they using any Islamic hedging to mitigate the fluctuations we have in the equity market? So we see, I know we've got Monim here, we've got Ratna here, we've got Ellen, and some of the, we've got Aida. So these are the fund managers who are actually managing some of the Sharia funds and so on. And obviously we've got Amran. So therefore, in most of the funds that are out there, the Sharia funds, they are looking at the way the markets work, and they are looking at also the gains of the equities and the loss of the equity prices as a result of the shift in the buying and selling of equities globally, and also with the effect of the pricing, the prices that affects it. In all of the funds, they don't really have a hedging mechanism in Islamic capital markets, in the fund itself. And so therefore, it's a direct loss or direct gain, depending on the movements and so on. So I just wanted to take the view of the panelists. Three of them, the three of you are from the Sharia side, and then Ihsan is now on the practitioner side, and maybe the practitioners can jump in as well. So first of all, maybe from your view, from the view of the Sharia scholars, is this the right thing to do? For Sharia funds not to have a hedging mechanism to protect the loss of the gains and the movement of the prices on the equities, is it the right thing to do?
Bismillahirrahmanirrahim. Mr. Chairperson, members of panels, and ladies and gentlemen. The Sharia is so perfect that it even discussed what you raised just now. That when it comes to handling others' wealth, they will always be under the responsibility of those who manage it to ensure that the risk is well enough mitigated. If you refer to the presentation made by our Dr. Marjan earlier, that there is a even specific Islamic legal maxims to make it as a requirement that in order for you, yes, in Islam, in order for you to gain profit, you have to assume liabilities. Al-Kharaj bid-Daman and Al-Unum bil-Urmi. Those are requirements that always being put in the mindset of anybody who wish to gain profit, that they have to assume liabilities and probability of losses. However, that does not stop us to ensure that the risk is well mitigated. Because if you refer to any Quranic verses or any hadith, when it comes to the word khasara or khusran, it doesn't show any connotation except it is a negative connotations. And similarly, when it comes to trading, investment, so for a fund manager, whether they should they not, if they have the capacity or capability or any avenues to hedge any of their funds, that is the first thing that they have to do. I think I would stop there.
Prof, you want to comment?
Yeah, I mean, Bismillahirrahmanirrahim. I totally agree with that, because when I discussed just now about the permissible risk and then non-permissible risk and tolerable risk, so within the permissible risk and tolerable risk, what Ustaz Fadlan mentioned just now, it is within the permissible risk. When you want to gain any profit, then you have to take the liability. So in getting the liability, then you have to manage the risk within that liability that you are undertaking. So if there is a possibility to come up with any hedging instruments within the boundaries of Sharia, then I believe why not? Even Islamic funds and Islamic asset management also should apply that.
Very good.
Okay. Bismillah ar-Rahman ar-Rahim. My take on this is that we need to understand the current situations when we want to interpret the Sharia dalil or the Sharia context. And I think many Sharia scholars fail to understand the differences. Because and I believe, as I see, the Malaysians are the most advanced in their thoughts, in their thought process. Give you an example, because the SAC, the Sharia Committee of SAC, they allow short selling, which is a very controversial ruling. And it is stated in the Sharia resolution that short selling is allowed, but regulated short selling. Regulated short selling meaning if the industry is regulated. And I think much of our industry is regulated. When we are talking about short selling, it happens in the stock exchanges. So stock exchanges, the participants in the stock exchanges are regulated, they are registered, and they are controlled. Thus, in Sharia, we are talking about matters of gharar. Gharar, that means uncertainties. Because when you talk about short selling, you do not know whether the transactions or the agreement will be carried out by the both parties, and there's a lot of uncertainties in the transaction. But the Malaysians, I believe, they take it as regulated short selling is allowed because both parties will transact, because there's an industry that will ensure both parties will carry out their responsibilities, and it is allowed. So and a lot of the transactions that we do is regulated. Financial companies are regulated by the authorities. Participants in stock exchanges are regulated, and we have to see the differences in these two sectors, because much of the rulings that we look in Sharia 1,400 years ago, much of the transactions are not regulated. That's why there are certain things that the Sharia ensures, or certain rulings to ensure that there is no oppressive or unfair dealings in two parties. But today, I think gharar or unfairness has been removed because of these regulations by the authorities. So, and I think the Sharia scholars have to look in this aspect. That's why I think basically Sharia scholars are struggling to understand this animal called the stock exchange, because it's never found in 1,400 years ago. That's why, and I believe hedging instrument is important, because stock exchange also evolve through experience, after some times, because people believe that there must be fairness in the industry. So hedgings, and thus we see options. Sharia scholars have a lot of problem on trying to reconcile options and even the option fees. Personally, I think that options, there's no issues in options. The problem is the option fees, whether it is equivalent to Orbon. But giving the same to take Orbon and option fees to be equal, I think that is not correct, because stock exchange and normal dealings is not the same. And even in the Sharia, there is a saying, al-hukmu ala shay far'un an tasawwurihi. The law on certain issues is just a part of the picture. Meaning that if you want to set a certain ruling, you have to understand the picture. You have to understand what is the context, what is the situation, before you can come out with a ruling. Because if you want to give the same ruling for an apple and an orange, I think it's not correct. So basically, I think a lot of the rulings that has been given, opinions, is basically we are comparing apple and orange, which is not accurate. So we have to understand how stock exchanges works, because this is actually where all the trading happens, and we have to come up with a ruling which is actually accurate to this issue. Yeah.
Ehsan, from a practitioner's point of view.
Well, I would like to bring the panel and the audience a bit one step back to go, as Ustaz said, to the fundamental of the Sharia. The real thing is la darara wa la dirar. There is no harm to anyone complying with the Sharia. It's a protection way of life, of elements that protects the buyers and the sellers, protects those who invest the money, those who receive it, those who are going on all the steps until you achieve your whole process of business. Therefore, I believe in a state of just thinking, mashallah, I mean, I really appreciate, as Ustaz said, where Malaysia have reached, and this reminds me of something also different as an Arab. The the grammar of Arabic language was not done by the Arabs. If you realize that it was a non-Arab who put the rules because he wanted to learn it. So he set up all the qawaid of the Lugha al-Arabiya by defining things that we as Arabs, we just talk it, but we don't know why we talk it like that, but this is how it is. But those who wanted to learn as the non-Arabic speakers, and they learn Arabic, they start to put for us the rules, and we start learning from them. Same thing, we don't want to claim that Arabs are the natives of Islam. No, that's a totally wrong perception. Islam is for everyone. But because Quran comes in an Arabic language, it is very easy for me, even when I'm taking notes from Prof in her speech, I'm not translating when she talk about Bay' salam or you know, like I realize the others when they are taking notes, they put it, you know, they put this script of the Arabic word and then they put some translation next to it. What I wanted to say is, from my perspective, as you said, as a practitioner, I want the people who are in my position to simplify the process and to go there. I believe there is a huge evolution in the Islamic market. There will be a lot of other things with the speed of innovative thinking. There will be a lot of other solutions that today we don't see it. But in the future, it will be quite close. Now, with the high speed of internet and communication and WhatsApp and all these things, now in anything happen in Saudi Arabia, we have a group, you know, on WhatsApp, and it's my classmates. They will send the thing that happened like 5 minutes back in Saudi Arabia, and I'm sitting in Singapore. And this is how fast the things goes, you know. So we cannot today sit with the scholars and talk in the same mentality that we talk about a fatwa that was done 60 years ago with basic knowledge of the person who maybe died 30 years back, you know, and he's not aware of what's happening today. Islam is a very advanced religion. It is not a religion who will bring you backward if you know how to understand the Sharia basics. So what I wanted to say is, mashallah, our scholars have reached to a very high level of details, which is fantastic. And I saw your presentation yesterday, and I was quite impressed of the details that you, I'm not promoting your company, by the way, but really I was impressed by the details of, as you said, the devil's in the details, you know, when you have the 200 pages and you go into very specific elements. That is for, of course, we don't want to expect, or I don't expect the practitioners to be a scholar, but at least he has one very easy things that he has to know how to simplify the process before he asks to get the fatwa. He should understand the steps. So if he explain it to a mufti or to a scholar who is eligible to understand Islamic finance, it depends also how you ask the question. You can ask it in a way and you know the answer, I want to be haram, or you ask for it in a different way and the answer will be halal. So sometimes that it depends of how you ask the question. And the second point is very important, that you are aware that the steps are important in Islam, same like when you buy a car in a conventional way or in an Islamic way. There are thin elements, only few people who understand that there is the option that you can return the car after you sign the purchase, and that's only in Islamic finance. In a conventional way, no, you pay deposit and you have to take the car, you have no choice. And the bank should own the car before they sell it to you or lease it to you. They cannot tell you, oh, go to Mercedes-Benz and collect your car from there. That will be a riba. So these are the small elements that gives you the major difference between Sharia compliance and non-Sharia compliance. So what I wanted to say is, as long as the elements and the products itself does not harm you or the society or any third party, causing harm, then you know that deep in your heart and in your conscience that what you are doing is the right thing. But there is no harm, of course, to go and cross-check. There are so many, now, mashallah, in Bahrain, we have what you call it, sorry? Not Ma'ir, there is one, anyway, it will come. There is one organization, AOF, sorry, yes, that is a very, also knowledgeable, they have very, very good scholars. We have, mashallah, in SAFE in Malaysia and the IFSB as well, they are quite advanced on this matters. Most of the banks, Islamic banks, they have their own committee. That's why it's not really standardized in that aspect. But I believe that if you go to the basic fundamentals, you will find the solution. Thank you.
Okay, good. Now, I want to touch on a couple of points, and I'm going to now bring in some of the fund managers also in the discussion. And the point I want to highlight is perhaps a couple of slides that you presented, Prof., which is about the markets. And then we'll talk about the hedging, we'll talk about the Islamic risk management as well. So first of all, I want to just touch a bit on the markets. I know Alan, who manages the Amana NZ, watches the US market down in New Zealand when everyone is sleeping, and he's the only one who's watching the US markets because his equity exposure is on the US markets. For those fund managers who are here, who have got exposure in Asia Pacific or ASEAN, you watch the ASEAN markets. Not many fund managers here basically trade in the Japanese market, okay? And the Japanese market has a couple of key points which you have highlighted, and I want to discuss that, and then we'll come with the fund managers. First of all the fund managers, including Thomson Reuters, who's here, will tell you that all the prices for the equities, you've got a current, you've got the market price of the country, Singapore or ringgit or whatever may be the case, and you have a US dollar pricing. So typically what happens is that when all the markets close in Asia, the pricing for the dollar does not happen until New York Stock Exchange closes at 4 p.m. in the afternoon, which is morning hour time, and then that's when they will take a rebalance of all the equities market to the dollar price. Munim, right? Okay, this is what's happening. And Munim with Satuna, so he knows this. So I'll tell you the other point which I've learned in the process, which was because the Japanese market is the first to close, the first to open, first to close, and then they are also the first to open again the next day, right? And so when the market closes globally and then all the stock prices have got $1 price which is rebalanced at the end of the New York Stock Exchange closure, the process of the rebalancing of the global equities and the data to be available to all the exchanges, you need about 4-hour window time for the pricing to be rebalanced. And so by the time it becomes 4 hours into it, Japan is already open for trading. And so the Japanese market has a problem. Every single day they have a problem. Because when they are open for business, the files that they closed last night were of previous night's trading prices, dollar pricing, and then they have to bring in the new dollar pricing for the market as well. So what typically happens in Japan, they use two prices. One which is at the start of the morning, and then they close at 10:30 in the afternoon, in the morning itself for the coffee break. And then there is a new price that comes in at 11, okay, which is yesterday night's US dollar pricing. And between the morning starting price and the 10:30 price and the 11 o'clock pricing that will come, the Japanese players will know whether they need to sell, they need to buy, and all the stuff that we are talking about, where the market, the pricing issues that you have highlighted in the slides, takes place in the Japanese market. You can either be a manipulator, you can be an arbitrator and arbitrate on the differences of pricing, and you can see the stock prices move up and down quite massively in the Japanese market. And this is the problem here. So therefore, in those kind of markets, you know, you really have a huge problem if you are saying you're going to do a Sharia-compliant Japanese fund. You as a fund manager, you'll be really frightened every morning to see what was the closing price and what is the opening price, especially like 1 week ago when the Dow plunged from the 17 to 15 and all the stock markets crashed, and then suddenly 1 week later it all jumped up, right? So you can really feel the huge movements of pricing. So in this case, how do we look at hedging mechanisms, speculative buying, selling, regulated at the exchange, as you said, approved in Bursa, plus if I don't take even any of that, all these fund managers who are here having to battle it, right, in terms of the pricing fluctuations. So before I go around, I'm going to just pull all these fund managers who are here and put them on the spot, starting with Munim. So Munim, so perhaps maybe you can touch a bit on the pricing changes to the equity markets and how you as a fund manager is sort out some of these issues when you don't have an alternative hedge to the equities.
Thank you for putting me on the spot. This actually comes up on another topic that you had talked about also. I mean, for us, for a lot of the fund managers, it really depends on the objective of the fund, because if you're not going to be buying and selling on a very speed basis, multiple times a day, those type of things, then that becomes a little bit less relevant, and then from there, then you have no need to be able to hedge. The problem that you're talking about is more of an operational issue more than it is a fund management issue. Meaning that how do you price a fund with different prices when the same problem comes up with the Japanese is open and close around the time. If you are going to be somebody who's going to be buying and selling quite a bit, then that presents, I wouldn't say a problem, but more of an opportunity. Because if you can actually front run what you think the price is going to be because you have a 4-hour window, then you could possibly make a lot of money. I think it's more of an opportunity to be able to do it. I think from an Islamic perspective, it would be very difficult to be able to do. And the reason is because of this idea of, how do you close out the transactions fast enough for you to be able to realistically make money in those 4 hours. So, but I think that from our perspective at Saturna, because we take such a long-term view, we probably would always trade after 11 o'clock. And that would be the idea, because we have price discovery and we know exactly what we're going to be getting at any given time for the price that we're going to make. That being said, on the risk side, I think the one thing that you have to keep in mind when it comes to risk is that there is a cost to having that risk transaction. And if you look at it from a portfolio of, let's supposing 40 or 50 stocks, okay, and having to hedge every single one of them, the costs would become prohibitive to be able to risk to mitigate everything. And so you're talking about to be able to take an index and be able to hedge it, roughly comes out to anywhere between 1% to 2% on a risk on a cost basis for hedging that risk. That eats into your costs when already the funds are charging 2% and a 5% load, and then there's the inflation is there and all those things. So for a lot of managers, the risk is actually, look, this is what we're doing. If you want to take the risk, buy the fund. If you don't want to take it, go somewhere else.
Great. Ratna, you want to comment on that, Ratna?
Specifically in terms of pricing, you're mentioning Japanese yen stock prices, right, in yen to translate to US dollars. I think most common convention is the London 4 p.m. dollar fix, right? So why would anyone wait until US markets close until 4 p.m.? Because the London fix is available.
Yeah, the London fix is available, but then when you go back to your Thomson Reuters pricing, it is taking the US closing prices.
I'm not sure. Yeah.
On the rebalance on the index itself.
Okay, because we are engaging in forward contracts as well on the currencies, and we don't see that problem right now, but we are embarking on the yen portfolio as well. Now, I think, not to add more on this, but in general, what the concepts, I don't disagree that the onus is on the fund managers to mitigate all these risks that can be managed. But I think from a practitioner point of view, we don't find Islamic institutions providing all these solutions especially maybe in certain jurisdictions, certain pockets, maybe they're available, but it's not widespread. And that's the issue that we are facing, and working with multinational, institutions, that if they can offer based on their existing frameworks. But when we approach the Islamic institutions, they do not have the appetite to venture into yen because they don't have the book. They're local institutions. So,
Thank you.
So the theoretical frameworks may be there, but from a practical point of view, we don't see a lot of supply for us.
Fantastic. Thank you very much for that. So coming back to the three Sharia scholars, in terms of your view, and you said that we should have hedging. So typically in the market, when you look at the global capital markets, right? When the equity markets are down, the bond market will go up. Vice versa as well, right? And the REITs market is somewhere in between, right? And then when the dollar market is down, the precious metal and the gold price will move up. So there's always a parallel move in any of the changes in the market itself. And so naturally speaking, so therefore if you are, say, an Islamic fund manager, if you just move in on a pure equity sort of like a play, and I know Monem was saying we are here for the long term, but even if you say over a period of 3 years or 5 years for a fund, and hypothetically those 2 years were the bad years for equity, and it was a slide, and then if you're trying to cash out on the equity, you really will feel the pinch, because you don't have a corresponding sort of like buy-in into a sukuk market to hold the prices, or to buy in some gold in your fund to maintain that value and so on. So therefore, when we look at it, should a Sharia fund have multi-asset class in its offering between, say, 70% equities, 15% sukuk, 5% precious metals, and say 5% on REITs, in order to show that a portfolio actually is moving up or consistently holding, versus a pure equity play and then be subjected to market movements and so on. So I want to take the Sharia view, and then I want to bounce back to the practitioners, because I want to hear whether they believe what we are saying on the stage is true. So perhaps maybe we'll start with the panelists. Anyone want to take this view, that we should have a balanced portfolio in order to mitigate the risk itself?
Prudent fund managers would definitely would apply the famous classical words of not putting all eggs in one basket. And I believe all of you have put it in your heads the minute where you want to be a fund manager to any fund. And through my experience before this, in helping a fund to be established, though it is a equity, but there will always be assets allocation where the fund managers have been given opportunity to reverse the investment in a time where equity is suffering a very huge slabs due to movement of the whether, like you said, US dollar against gold, equity against debt, and so on and so forth. So all these privileges which is put earlier to the fund managers when they are establish a fund, and make it very clear to the clients or investors, is very crucial. I mean, having, though yes, it is, if you say, we are equity, but yes, having a different assets allocation would be a hedging instruments in a time where, when it comes to equity rainy days, you don't go there even though you have umbrellas. I mean, why you get yourself wet if you don't have to? So having a different avenues, investment avenues, as an alternative is one way of hedging, not to go into the market who is dying. So I think, from my point of view, based on my previous experience, yes, fund managers, though you've been given a mandate by the investors, by the fund owners, that you should invest in equity, always try to convince the fund owners that it is always best to have alternative avenues in a time where some assets allocation portfolios are suffering any instability? Thank you.
Ehsan, you want to comment on that?
Yes. In fact, from reality, as you just mentioned about whether he's convinced of what we are talking about or not, there is a real example that I can share with all of you that we have participated in a fund, and our fund manager is a Chinese non-Muslim, Singaporean, and today he's handling 2.2 billion US dollars. And he told me that after getting into Sharia compliance rules, he was very hesitant in the beginning, but then he came back and he said, I'm amazed that if I follow these rules, I can make more money. And I mean, in the first glance, like, are you joking? He said, no, I'm serious. And he meant it. So, of course, we insisted in the beginning that, and he was like, he was not sure that he can get it, you know, but after, he was a brilliant, of course, he's still a brilliant guy, and he managed to be oriented on this. It took him less than a month, communicating with a lot of good scholars who really simplified the things for him, and he asked very specific questions of, this is permissible or not, can I do this, can I do that? And this is yes, this is no, and why? But he's very quick. So what I wanted to say that practically, even you don't have to be a Muslim to know how to manage within the perimeters. It is just like, okay, the regulatory system says 1, 2, 3. It is an Islamic Sharia compliance say 1, 2, 3. So, but instead of being as a country, it is just as a simpler regulation. So it is doable. It can be understood by non-Muslims, and it is not. It doesn't need to have a PhD to really get it. Thank you.
Okay, good. Ellen, you want to comment in terms of how you will want to manage a multi-asset class to ensure that there's no degradation of the equity investments? Someone with the mic can just walk up to him.
Hello. Thanks, Arif. Firstly, I couldn't agree more wholeheartedly with Monam. There is my research and many far smarter analysts than myself working for much larger institutions that show time horizon is critically important. There's been a threshold in the research that there's a case for currency hedging up to about 2 years, but then the further you move away for 2 years, the 10, 20-year horizon, there does seem to be very little case for currency hedging. Secondly, I agree with your panelists that diversification is an excellent way to mitigate against many risks, but then again, it depends on the diversification and the mandate of the fund manager. Some fund managers cannot invest in multi-asset classes, like myself. I'm in international equities, and my mandate does not extend to bonds, to treasury, and to commodities. But I think the most important thing you're looking at, and certainly I took a lot of very, very good instruction from Dr. Margin's paper this morning, for which I thank her, was you've always got to go back to harm, and when you're looking at harm, there is both real risk and perceived risk. And in today's environment, I think there's just as much perceived risk out there as there is real risk. We've managed to, just using diversification in the equity space, to go through one of the worst financial crises, certainly in my lifetime as an analyst, and came through it quite well by using very, very limited hedging techniques. Probably one way we looked at it is by discarding some of the very traditional, what I call inverse relationships. It is not true that sometimes when equities go up bonds go down. It's not necessarily true that when the US dollar gets stronger, the inverse will happen with gold or crude oil. There are too many introduced factors there that are making some of these traditional inverse relationships aren't always the case. And when panic hits the market, people are looking at only one thing, liquidity, and how fast they can get rid of it. So I think when we're looking at hedging techniques, we have to look at the specific mandate of the fund manager, and we have to look too at coming up with new and sometimes very sensible ideas as suggested by Sharia on how we can best manage risk. The most important thing is our view of risk. Is it perceived or is it real?
Thank you very much. So I've seen, sorry brother, before I call on you, I see UNY at the audience. And UNY, I want to pull you in because of a UBS experience and now having to manage a Sharia fund. So what are your thoughts in terms of, from an equity play, in terms of managing that risk perspective? How do you intend to play that out? So can someone bring the mic to UNY over there?
Can we move the discussion on to the next forum later on? I think they'll be talking about, yeah.
Okay, so you're safe,
yeah.
UNY. Okay.
But allow me to jump in. I'm not sure if I missed what Dr. Marjan said earlier. I have a question, actually.
Okay, go ahead.
Okay, first and foremost, I'm not a fund manager. I'm a mere mortal. Arbun, when you do Arbun, is there a transfer of ownership, and does that allow you to on-sell a product which you have placed a down payment on? Secondly, on short selling, how do you know if someone applies the short selling for hedging purposes or just for pure speculation? Is there a way to determine that?
So thank you. I think your question leads to the other point I wanted to highlight, which is on the Arbun part of it. So on the Arbun part of it, first of all, Doctor, you highlighted that it is on the Hanbali school, first of all. Secondly, I want to, when I look at the way it is being structured, and I ask myself, I said many Singaporeans enter into Arbun, maybe even Malaysians, because we put a down payment for a particular product, we agree on the selling price, we agree that we want to buy it, and between the buyer and seller, they'll say, okay, can you put a down payment to what you want to buy? We say yes, and then the down payment becomes offset to the total selling price. So it meets into the Sharia point of view. So when you highlight the view, the point that the Sharia scholars are saying don't apply too much on Arbun, because it's maybe a minority view. The market practice is, we are all doing it every single day. When we buy from a single point or you contract for wedding services or anything else, a down payment is required and the final contractual price offsets the down payment price. So it's a market practice. So I don't know whether the market practice now has preceded the Sharia recommendation to limit it such that nobody listens to the Sharia scholars, which is bad. Or maybe the Sharia scholars should say this is the urf of the market. The urf of the market in Asia, in minorities, it takes into consideration the down payment as the initial sum, and it nets off the final sum. And so therefore, what's wrong with it in saying, let the urf of the market take place, and we recognize urf as one of an important Sharia factor in muamalat. So therefore, I see that. Now, taking that into the capital markets, that's a different thing altogether, how you then limit and so on. So perhaps I wanted to touch on that and then taking from where Hamisa had raised to the panelists on this particular point. Who wants to start first?
All right. When I mentioned different views of the classical juries with regard to the rulings on Arbun, and then only the Hanbali school who are in favor of Arbun, then we take into consideration the modern scholars when they analyze the opinions of the early juries with regard to this practice. They have taken into consideration the uruf as well. That's why when OIC Fiqh Academy came up with the resolutions allowing the Arbun, then I'm sure the Uruf elements has been taken into considerations, because that's what happened in our daily life. I think even myself, I have been practicing Orbun as well. So what we need to understand here is what are the conditions that we have to follow if we were to conduct any transactions based on Orbun. So whatever the conditions that have been put up front by the scholars, that has been, it has to be followed through. I mean, it has to be adhered to. So come back to Sister Hamisa's question, whether upon the placement of advance, one thing that you need to understand, because there is one more terminology, which is Hamish Jiddiyah, that is also being practiced in the market. So what is the difference between Orbun and Hamish Jiddiyah? Hamish Jiddiyah, it is also down payment, but the difference between Orbun, Hamish Jiddiyah is not part of the selling price. Meaning to say, when you pay the Hamish Jiddiyah, you don't have to enter into contract. But in Orbun, when you put your down payment, upfront you have entered into a contract, a selling contract. It's just that in terms of possession, in terms of the ownership, you don't own 100% the asset until and unless you have made your decision to enter, to conclude the contract. So that's why the importance of having the condition when you are going to conclude the contract. So I hope I answer your question. No, of course.
Okay. Yeah, sure.
Yeah, because as I mentioned just now, is we have to understand what happens 1,400 years ago and what happens today. Okay, because 1,400 years ago, you are transacting very basic transaction, and you do not know whether both parties will carry out the transactions. But today is so much different. Okay, and transaction moves very fast. So and when give an example like in the Islamic context, there is a maxim called "La tabi' ma laysa indak." Do not sell what is not yours, and that is understood. But in today's context, we sell what is not ours. Okay, and even like regulated short selling. Okay, you are selling actually what is not yours, but the Malaysians allow it because it is regulated. And also in Arbun, the context of Arbun today also is basically when you pay Arbun, it's basically yours. And businessmen today, they transact in such a way that they pay a down payment and they start selling their goods. So is that contravening the Sharia? Because you are selling which is not yours. But the context today is that when you pay Arbun, the transaction is almost done. That is our urf. That is our understanding. And the contract is, we understand that in that contract, you will fulfill your commitments and I will fulfill my commitments. Since I paid my Arbun, and I can do whatever goods, even though I have not received it. That is the aspect I think is missing here. Okay, that's the aspect missing here, that we need to understand the urf. We need to understand the context of present day's transaction, and we need to understand the differences of today's conditions and previous conditions. Yeah.
Thank you very much. These are some very interesting points, and this could lead, your last final point could lead to the discussion of derivatives and futures. I wish we had time, but I'm being told we have to end the session because the next session is about to commence. So perhaps, inshallah, maybe later this afternoon when we have opportunities to have wider discussion, I hope all of you don't leave and the members of the audience don't leave. And if we have chance, we can then pick up the points on derivative trading, futures trading, how it affects Urbun, how the urf of the market takes place, and that could be another level of discussion. So with that, thank you very much, dear panelists, for the excellent views, and members of the